Hey everybody, Tom Gentile. Welcome to another week of our Profit Strategies podcast. With me again, as he is almost every week, is Chris Johnson. CJ, how you doing?
I'm doing great, Tom. How are you today?
Man, you know what? I'm good, but I got to tell you, we got a lot to cover today. In a short amount of time, we got to talk about the markets and what happened this week and what we see going on next week. I want to talk a little bit about tax season, because you got to start thinking about this. I mean, we're a couple weeks away from the year ending.
You're right. Yes,
But
it feels like I just got done with my accountant for the year. But let's go ahead. Let's jump in. Let's get moving. Yeah.
Oh, well, before we get to anything, what about that Steelers-Ravens game that got postponed 3 times?
How about it? On a Wednesday afternoon, I felt like I was watching a JV high school game on a Wednesday afternoon at 3:40, and it wasn't impressive. I mean, the Steelers won, but in an unimpressive way.
Gosh. They better be glad. They better be glad 22 players on the Ravens were inactive because of COVID.
Yeah.
22!
I mean,
they were playing a high school team.
Well, they were, and they both played like it. And what's terrible is, if you're a Steelers fan like we are, we kick it off. What is it? I think it's Monday at 5:00. We got a 5. It is as if Roger Goodell is telling Steelers fans, I hope I don't offend anybody, but they should be drinking in the afternoon now to get ready for all the games.
Well, if you're British, and I don't want to offend the British, but they have drinks with eggs. So,
maybe they've got it right. Who knows?
Anyway, God bless those British.
There you go.
All right. So, hey, markets this week have been really kind of a slow burn to the upside, which is what we have been expecting. I don't know, your thoughts?
You know what? I always like to talk about what surprised me, what didn't work this week. And what didn't work, Tom, is something I've been preaching, which is clean energy. The clean energy stocks are just getting railed for the last couple of days. I think we're seeing profit taking. There's been no big announcements. These stocks are the ones that I think are going to shine in 2021. So when I look at what didn't work, that is what didn't work. When I look at what worked, man, look at steel.
Yeah. Oh, yeah. There's a rotation for sure.
Oh, we're seeing value come out in a big way here in this market, but steel is the new silver, and it is still shining, man. It is still shining.
Rotation is coming out of clean energy right now. It's going into financials. It's going into industrials, and some of it's actually rotating into tech. I mean, we talked about this a couple weeks ago, that holiday pattern was shifting, and it was actually early. And it's supposed to end this week, but you've got some layered stuff that I see. And as long as we don't have any crazy news, I'd say we got at least another week of sideways to potentially up. And that's benefiting stocks like Amazon. I mean, I hold long positions in Amazon. Those are doing fantastic. I have a long position in Apple, which is slow. It's a slow burner, but it's starting to move in the direction I want it to go into. I think Apple's finally above 120. There's companies like Etsy. And you know what? I got to give kudos to you, because I was not looking at Etsy. I was looking at Amazon. I heard you on a podcast or two before saying Etsy. So I started option positions on Etsy. And I got to tell you, I am 90% to my profit target on Etsy just in the last 2 weeks, Chris.
I love this stock. I heard their CEO talking about Small Business Saturday, Tom. I don't know if you got out and did anything, but she was talking about the fact that you can actually set your filters on Etsy to find your local artist in your state or even your town zip codes. Man, come on. That is awesome. So
I've got, I've hit 90% of my profit targets on Home Depot. Also, one that I'm in that is doing really well is KB Homes. Yep. Lennar is dragging right now. So, I mean, when you look at my portfolio right now, that as of coming into the weekend, I got some home builders in here. I got some tech. I mean, the only thing that's not doing well for me is this little Chinese social media company. The symbol is Momo. And I need some Momo profits, but right now I'm getting Momo losses in Momo.
I have traded Momo before, and Momo needs some mojo. Yes,
it does. But yeah, I mean, you know what? Most of my open positions are doing very well as we enter in, and so I'm also going to tell you most of my stuff comes off the board on the third Friday of December, and then I've got to do a reset and kind of get an idea where January goes. But we'll talk about that in a couple of weeks.
Let me rewind you for a second here, Tom. Amazon.com. So Amazon, when I look at it, 3,200, this thing's going a little bit of flatline right now, right? And you are the king of spreads as far as I'm concerned. Spread it's, everything. Do you play this thing for a pending breakout? Because I think that Jeff Bezos has got to be walking around his mansion right now, looking at the stock price going, when are we going to break away from 3,200? And he's like Scrooge McDuck. He's got gold bars and he's breaking stuff in his house. It's expensive with gold bars. That's what he does when he gets
Yeah,
upset.
yeah.
So does this stock break out from 3,200 and take off to 3,400 again?
Well, if you're going to play the break, you can't play it until the break actually happens.
Mm-hmm.
And so there are strategies. In the stock market, you can do stop orders, which means you can actually get into a trade when it hits a certain level. So if you say, you know what, I want to be in this thing if it closes above 3250 or it's a
Mm-hmm.
3250 or higher, then you can have a market order that gets initiated as soon as the stock hits a certain price level, and it could be on the way to a breakout. Now, the great thing, Chris, is because you and I are option traders too, we can now target. There are brokerage firms out there like Schwab, Thinkorswim, TradeStation, I think IBKR, Interactive
Mm-hmm.
Brokers, does it
Yep.
too, that they offer a way of getting into an option based on the breakout of a stock. So you can actually create a contingent on price, which means when the price of a stock hits a certain level, then you can have your broker initiate an option trade on a
Correct.
specified option based on that breakout.
Yep, on the underlying. It is absolutely 5 years ago, we would be scratching our head saying, when can we, why can't I do this? Now you can. And
Yep.
again, we're looking over each other's shoulders, it seems like sometimes, but I just used a stop order on a trade this morning for my strike point service. Exactly as you said on an option, used a stop with a limit. So
Yeah,
if the stock
they're there.
and I used Black Scholes, good old Black Scholes, to figure out what my stop price should have been on the option for the stock to have started its breakout. But these are great strategies that we're going to have to talk about in depth at one point.
Yeah. So another one that I'll tell you that I did this week is I rolled my gold.
Ah,
I rolled my gold. So
like the pretzels.
it shouldn't be a stranger to the fact that for folks listening to our podcast that GLD, that I'm an owner of gold and that I like the gold and the gold ETF to the long side. And so the way that I acquire GLD is that I sell put options. And I had some 165s that went down to almost nothing. So I went and rolled them. And so my 165s, which expired just this week, I went and rolled up to 170s for next week. And so what I'm doing is I'm doing a process called rolling because I really want to own GLD, and I wanted to own it at 165, and it didn't hang out there very long, and it ran up above 170. And so I went ahead and sold some 170 puts for next week. And I'm not getting a lot for these, Chris. I mean, these are not like $10. I'm not getting $10 a contract. I'm lucky if I can get $1 a contract on GLD because it just isn't that expensive. But it's a longer term process that I'm working on because although I see December as a green month, the money calendar, which is a piece of software that I use that bases at least 10 years of data, and a lot of times I look at 20, show that the month of December is a green month. That means that the most popular stocks, most of them have had a 90% or greater pattern in the month of December that goes higher, that takes the stock price higher into the end of the month. And so I have to lean on that side. And yes, I would love to put some bearish stuff in my portfolio, but I just don't see it right now. So I've got to sit tight. Now, once we get to the area that I like to call sell the news, and sell the news in Christmas, and you know when this is the
Mm-hmm.
day after Christmas. It's when, or really you start thinking about Christmas Eve.
Yep.
Start looking at the fact that retailers are going to have to start telling people what they did. And of course, we got the day after Christmas, which is the day everyone goes and refunds. And this year will be different, Chris. It'll be the day when everybody boxes up their refunds and gets
Correct.
UPS to send them back to Amazon.
Yep. Exactly.
so that's that's those are things I see heading forward as we get to the end of the year. What do you see as an outlook? What's your outlook to the end of the year? Do you see anything that looks interesting?
When you look at seasonality, you've already hit on this. 70% of the time over the last 20 years, the S&P 500 closes higher for the month of December. We have that bias to the upside, and I think you let that roll. One of the things I've been thinking about is the ruckus that's going to be caused in January, as we see the new administration, the Biden administration, take the reins here, and specifically also on January 5th with that Senate race down in Georgia. I think you're going to see volatility re-enter in January as we roll in. You have the banks start to announce their earnings early in January. You've got the political shifts here. I think it's going to be one of the points where the market takes a break, but I'm with you. Until the end of December, I think that you continue to see this flow of money coming in. A lot of people chasing dollars higher. I really am focusing on that infrastructure portfolio for next year, the rebuild portfolio next year, which you'll hear me talking about for the next couple of weeks.
Yeah.
Just over and over. I think that's where the play is: steel, concrete, um, rental companies like United Rentals. That's where you want to be next year. I don't think it's going to be the banks and the companies that are getting some bounce right now.
Yeah, I'm looking at that too, and I'm looking at, like, I'm even going to go further and look at concrete,
Mm,
because I think that area and companies that are in the manufacturing, sales, distribution of concrete are also going to tend to do well with this new infrastructure piece. And
yeah.
so, I think you're right on target for long term success in rotation into
Yeah.
that area. I
Check out.
also agree. I also agree with you about January that we could see some volatility right after the holiday.
Yeah, I remember in January of 2000 when Bush and Gore were going at it before the inauguration, and right after the inauguration, all heck broke loose in the market for a little while, and we took those big steps down. So I think this is going to be a weird transition of power.
Yep. Hey, before we get off the subject and
Hmm.
move to our final topic, have you been watching the U.S. dollar?
Oh yeah, took a big step down today. We're
It's been dropping, and folks, just to give you an idea, the U.S. dollar was at its highest point right in the middle of March when there was a fire sale going on with everything, stocks, commodities, foreign currencies, you name it. Even Bitcoin was dropping like crazy. And I got to mention a couple things about Bitcoin. I'll get to it in a second. But the U.S. dollar dropping, and if you take a look at UUP, for those of you home gamers out there who want to take a look you can't see it because we're on a podcast, but take a look at UUP, and what you're going to see is you're going to see something that was at 29 back in March. Okay, so March was crazy. Forget March. Just look at what's happened since Labor Day. Since Labor Day weekend, we were in the 25s. In fact, we went as high as 25.60, but now we've hit fresh lows at around 24.60. And you might say, that's only a point, Tom. That doesn't mean a lot. This is the US dollar. This is supposed to be the most stable thing in the world.
Yep.
And we've dropped from a 25 to a 24. That's a full point. Okay. That's 4%. The US dollar has lost in value in the last little more than 2 months. We're talking about 4%. That's a big deal.
That's huge. Yep. How are you playing that?
So,
I know Bitcoin. Anything
you
else? You've got
know,
you're rolling your gold. That's obviously a hedge.
yeah,
Anything
yeah, but
else?
I mean, I've got this inkling that if we do roll into January, that maybe one of the safest trades might be buying U.S. dollars, and
Really?
and people, I mean, as a hedge. And I'm thinking that if we get any lower, it's going to become a value play because it's down significantly than where it was early in the year. Although you do have to worry and this could be the trigger right here. the next round of stimulus, because
Hmm.
it sounds like it might be coming. The old adage, buy the rumor, sell the news. This would be sell the rumor, because that's what's happening right now, and buy the news. And when that thing comes in, we might get a gap down in the US dollar that might create a buying opportunity
Yeah, I think you're
ahead
gonna.
of, as a great insurance ahead of the runoffs in Georgia in January.
Yeah, I
Just an idea.
definitely. I think you're spot on. I think this is going to be a situation where as soon as they say yes, and I know McConnell and Pelosi are kind of talking, which is rare, but they're talking about a smaller package now. I think, and I said it this morning on a live stream. I It's going to be funny. You know those desks that you can do like the treadmill desks, Tom.
Right. Yeah. Yeah.
I
I
think
got one of those.
I think they're going to have something equivalent to that for Joe Biden when he's walking down Pennsylvania Avenue after the inauguration,
Oh, wait a
and
minute.
and
You're
they're
like
just
the Popemobile.
yeah, they're gonna have a desk in front of him. He's going to be signing stuff right after he raises his right hand,
I see.
and
I
I think
see.
one of them is going to be the monster package that is just going to be,
Yeah.
this is it. And when they talk trillions and trillions again, holy cow, the lights are going to dim because they're going to rev up the printing presses so fast. You're going to see those lights go down real quickly because of the draw. But I'm with you right there. I think
All right.
you.
And Chris, that leads us into our final topic, because you said it. You hit the nail on the head, and that has to do with the Biden administration coming in. So we have a couple scenarios. A, well, I mean, it's pretty prominent. Biden's going to be sworn in. I mean,
Correct.
the train has left the station in my mind, for President Trump. In fact, he's already saying he's not going to be at the inauguration, and
Yeah.
he's going to announce. And apparently, there's plans that he may be announcing his 2024 run on the same day.
Mm. On his own
Um,
network. I'm not sure.
so
Maybe his,
just continued drama.
it's so weird, Tom. Go
All right,
figure.
but getting past the drama for a moment. Okay, so here's some scenarios that are setting up. A, Biden's in, and we have a lame duck Congress.
Yep.
That, for folks that are concerned about taxes going up, is probably the best scenario we can look at right now.
Yep.
B would be Biden comes in and the state of Georgia turns blue,
Hmm.
and then if that happens, that we're going to have a situation where we could see a lot of that repealed.
It
All
is
right,
on like Donkey Kong, as Uncle Si says on the Duck Show. Yes, taxes will be in play at that point.
so yeah, so I mean, I was talking with my CPA earlier this week, and I try to strategize, not on the final week of December. I start thinking about this the first week of December and start putting things into action. And so, you and I both, as part of our companies, we trade, right? And
Mhm.
there are certain benefits that we get as traders. And I think as we go forward, there's some things that you and I could lend to the audience here as traders, as to maybe some ideas for preparation. As we move forward towards the end of the month.
Yep.
And so I wanted to just quickly first, and you and I can banter this back and forth for a few minutes. But the first thing I'm thinking of right off the bat is, if you have losses. This is the thing that my uh, CPA told me. Do you got any losses to sell against the gains? Do
Harvest.
you have
Yep.
so that will reduce your capital gains tax, because if you have capital losses. So, and this is called tax loss selling. Hedge fund managers do it to limit the burden on their clients. But you can do it too. You just have to, you just can't turn around and buy the thing straight away at the new lower price. If you love something that much, you either hang on to it. But if you want to create a tax loss situation, you have to buy it. I think you can't buy it back for at least 30 days.
I believe you are correct. And as always, you should speak to your tax professional before you do it. Um,
Absolutely. And we'll probably say that a few more times here in the next few minutes.
right.
But
I'm not one, and I don't play one on the podcast or TV. So.
right, but what about Chris? What about deducting expenses like your computer and your internet feed and cable? If your for me,
Commissions if you're still paying them.
yeah, for
Yeah.
me at least, I mean, you get the basic cable channel or whatever you want to call it these days,
Right.
and then CNBC here on the one we use, you have to go to the ultra package
Hmm.
to get CNBC. So I deduct the difference between basic and ultra. I'm not going to deduct the whole thing because let's face it, I don't get a whole lot of trading tips from my local news or from the
Right.
weather channel, but I use CNBC, Bloomberg, Reuters, etc. as part of my news feed, and so I should deduct that as part of my trading.
Absolutely. You know what? And this is one of those things that I've learned over time, Tom, is that exactly what you're saying. Commissions, and it used to be commissions, not so much the case now. But your commissions and anything that you can say that went directly to those profits trading. My accountant has always told me keep track of them, especially if they're easy data sources and stuff like that. Computers always got into a sticky point for me because are you just using it for trading and yada and depreciation, and it gets harder. And I wanted to go back to the tax loss harvesting that you just brought up too. And you hit it on the button as you always do. You've got to ask yourself one question. Do I not want to hold this stock? Is this a stock I'm walking away from almost forever? Forget about 30 days. But do I just not want it? Because there's that emotional tie that we all get to stocks. And the cost of walking away is basically the loss, but that also is a savings for the taxes. I tend to not. I tend to find it very hard to do tax loss harvesting unless it's something that's been sitting there forever.
Yeah.
It's and I probably would have sold it before anyhow. But when you get down to the expenses of trading, it is a very easy way to start adding up some stuff that you can write off against those gains. And you're got to have an account that's going to quote unquote play ball a little bit and understand it. Um, and I've even heard of accountants suggesting that people set up, and again, I'm not a tax accountant, an attorney, but I've had the suggestions that people should consider setting up an LLC, which can be done for $100 through your state. And that way you now have a company or a shell that you can run your trading accounts if you're doing it that much. Now
And
you're
you know
talking
what,
about, go
Chris,
ahead.
I mean, you just set it up for me. You just set the pins back up for me
Oh,
for that, and that is,
knock, knock them
a
down.
lot of people. A lot of people they tax they toss around this day trading, the day trading rules, and active day trading. How much you have to do to be an active day trader? Honestly, to me, you can avoid that whole conversation by setting up an LLC
Hmm.
and making trading part of what the LLC does.
Yep.
It doesn't have to be all of it. It just, because for me, and again, this is for me, this is the way mine is structured, is that I have an LLC and it has private and public investments in it and includes my trading. And so, I have all that structured. And so that allows me to deduct all these little things that we deduct. Now, also part of my business is that I talk to great guys like you, and I get to broadcast to the great folks listening to this. So I have a few other deductions as part of my business as well, like camera equipment,
Hmm.
lighting, the podcasting room, the stuff that I put together. So this stuff all makes these programs run efficiently. And guess what? They are expenses to me, so I get to deduct those. I'll tell you something else I'm doing too. And again, Chris, you said it, and I said it, and I got to say it again. You got to ask your accountant or your tax professional, really for your own personal use. But you know, Chris, I bought a Sprinter van earlier this year, and I talked to my CPA. And I do YouTube. I got a YouTube channel, so I do YouTube videos on this business, and we do some of the what options are, market outlooks, etc. I've broadcasted from the van, and in fact,
Oh, there we go.
I've learned a couple things. I've actually learned a couple things. I don't think my van is big enough. Um, so I got to get something a little bit bigger. I got to get something a little more rugged that I can that has a few more solar panels on it. And so I'm going to be doing an upgrade.
Hold on,
And
Tom. Tom.
so the upgrade is what we're also doing is with the van. So I'll be
Yeah.
doing a lot of my videos from the van. But here's the important thing. I'm going to wrap the van. I'm going to put my company information on it. I'm actually even going to put the YouTube channel on it too. And I'm going to complete that van as a Section 179, and which will allow me to depreciate that as a company vehicle and as a company asset, 100% right down the line deduction in the year that I purchase it.
You know what? I'm not 1975. You're going to need a bigger boat, Tom. Jaws. You just brought that whole movie to mind. You're going to need a bigger boat. That's why I was laughing. I love this idea. You're going to have to let me talk to your accountant because I want to write
Yeah,
my camper off because I
I'm treating
work in
it,
my camper all the time.
and I'm treating it as a mobile command center,
Sure.
and it will be used for 50%. My idea is it's going to be used for 50% work and 50% play. So I'll deduct 50% of that expense because that's the legal thing to do. But speaking of legalities, it's perfectly legal if you have a vehicle and you're using it for purposes of your company. That you have that deduction is out there, and one of the things I was asking my accountant is I said, "Do you think this is going to go away?" With the new administration, and he said, based on the small businesses out there that are hurting, he doesn't expect to see something like that go away too soon because that could have a ripple effect on the economy, especially on durable goods and big purchases.
Sure. Sure. I mean, you are together. We should be. I don't know. We can expand the operations to be on the road between you and me in Florida. We'll have the whole area covered. Maybe we can put a little jamboree, a trading jamboree together after we have our vehicles set up for this on-road trading. How's that
Yeah,
sound?
tailgating.
Yeah, trade gating, trade
That's
gating.
right. But yeah, so I mean, and these are just a couple of things, guys. I mean, we could spend hours going through and dissecting this. This is my suggestion for you to summarize this: is that A, get out there on the internet, Google tax planning for traders. You'll find so much more information that Chris and I could possibly do in a portion of our podcast. B, make sure that you're seeking help from a financial professional, a tax planner, or your CPA, because they're going to tell you what's best for you, whether you may need to incorporate or you could just do the DBA, doing business as, and you trade as on your own name, et cetera, and still maybe get those returns or those deductions. And then, for me, and I say this about everything, is that, the day that I think I know everything about the markets and about, all things trading and investing, that's the day I'm retiring, because you never learn too much.
Yep.
So.
Yep, absolutely. You know what? You'll always continue sharpening the knife. Always continue sharpening the knife. I will never know everything I need to know, and I'm fortunate to have discussions like this with you because it opens my mind up for more questions. Hey, you
Yep.
want to know the LLC that I do a lot of my trading under, Tom?
Yeah, what's that?
The Ohio Soup Company.
Nice.
It is registered with the state of Ohio, has its own EIN, the whole 9 yards. You can do anything with it, and I am going to be making soup with that company. That's why I started it. So
Awesome.
yep.
So you know what? So for next week, let's pepper it up a bit here, Chris. For next week, we'll look at the markets. It's going to be I think it's going to be a really boring week next week, but we'll see. But how about we talk about retirement, and we talk about we'll talk about problems, we'll talk about solutions, and kind of what the average person would need for retirement. And maybe we'll take a look at if you're a millennial, if you're a Gen Xer, I'm kind of a Gen Xer, or if you're a baby boomer, and where you need to be. So that's really almost like a 10 years from now, 20 years from now, and 40 years from now kind of scenario. So we'll talk. We'll take a look into that next week. What do you say?
I'm in. I am in.
Awesome. All right, guys. Well, thank you very much for joining us on this week's Profit Strategies podcast. We'll see you again soon. Till then, have a great weekend. Bye now.
See you, Tom.